Hey everyone, welcome back to Corporate Decoder. Today, MIDD just filed an 8K about a spin-off, and I'm seeing one detail that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The main story here is about Middleby Corporation splitting off a piece of its business, Midera Food Processing, into its own publicly traded company. This form is basically a way for companies to tell the public about important events that happen between their regular financial reports. Think of it as breaking news for investors. So what is the big news? Middleby Corporation is getting ready to spin off Midera Food Processing Incorporated. This means Midera will become its own independent company. The United States Securities and Exchange Commission, or SEC, has declared effective the registration statement for this spin-off. This is a major step toward completing the separation. The important date here is the 17th of June 2026. That is when the SEC made the Midera filing official. Middleby Corporation, the company we're talking about, is a pretty established player in the industrial space, specifically in specialty industrial machinery. Their market cap is around $7.4 billion. The company is incorporated in Delaware, a common state for businesses, and their principal executive offices are located in Elgin, Illinois. Middleby Corporation's common stock trades on the NASDAQ Global Select Market under the ticker symbol MIDD. The most interesting part of this filing is the disclosure about the spin-off details. Regulation FD, or fair disclosure, means that companies have to share important information with everyone at the same time, not just a select few. So the CC has given the go-ahead for the official paperwork, the Form 10 for Midera. This officially paves the way for Midera to become a separate, publicly traded entity. Now here is where it directly affects current Middleby shareholders. The board of directors has set a record date of the 26th of June 2026. If you own shares of Middleby Corporation as of the end of the day on that record date, you are going to receive shares of Midera. It is going to be a pro rata distribution, which means you'll get Midera shares based on how many Middleby shares you own. And here is a really important detail. It is a 1-for-1 distribution. So for every share of Middleby you own on the record date, you'll get 1 share of Midera. The actual distribution is expected to happen on the 6th of July 2026. This is a fairly clean way to split a company, and the 1-for ratio avoids complicated calculations for shareholders. Of course, like any major corporate event, there are conditions. The board needs to formally declare the distribution, and other standard closing conditions have to be met. But with the SEC declaring the Form 10 effective, it seems like they are well on their way. This section usually details any financial statements or exhibits that are part of the filing. Exhibit 104 is the cover page interactive data file. This is essentially the same information as the cover page, but formatted for computer systems to read, which is called XBRL. It helps make financial data more accessible. And now we get to the standard legal SIA language, the cautionary statement. This is where the company talks about risks and uncertainties. They are basically saying that some of the forward-looking statements they make might not actually happen. This part is really crucial for investors to understand. Companies are required to warn people that their expectations about the future are just that, expectations. Things like the timing of this spin-off could change due to various factors. They emphasize that their statements about the future are estimates, and a lot of things can influence whether those estimates come true. This is the core of it. There are risks, both known and unknown, that could make the actual results of Middleby very different from what they are predicting. They then list out many of these potential risks. It is a long list, covering everything from market conditions and competition to cybersecurity threats and the success of future acquisitions. Here is a key risk specifically related to this spin-off. It might not happen when they expect, or it might not happen at all. This could be due to regulatory issues, market changes, or if some of the conditions for closing the deal aren't met. Another big risk is that the whole process of spinning off Midera could disrupt Middleby's ongoing business operations. This can happen when management's attention is divided or when employees are uncertain about the future. It is also possible that this spin-off will end up being harder, take longer, or cost more than they initially planned. And a very significant concern for any spin-off is taxes. If the separation doesn't qualify for the intended tax treatment, it could have major financial implications for shareholders. Finally, the report is signed off, confirming that the information is accurate to the best of their knowledge. The signature indicates that the Middleby Corporation has authorized this report. And the signature here is Brittany C. Serwin, who is the Chief Financial Officer. This shows that the financial leadership has reviewed and approved this filing. So what is the story here? Middleby Corporation is executing a pretty straightforward spin-off of its Midera Food Processing business. The key takeaway for Middleby shareholders is that you'll be getting shares of Midera on a one-for-one basis. The completion date is set for the 6th of July 2026, with a record date of the 26th of June 2026. While the filing goes into a lot of detail about potential risks, the core event is this distribution of Midera shares. It will be interesting to see how independent Midera performs and how Middleby focuses its future strategy now that it has shed this segment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord community, linked below.